Hi everyone, welcome back to a new video. In today's video, we're breaking down ICT's unicorn entry model, one of the cleanest and most powerful setups for precision entries. I'll walk you through exactly how it works, why it's so effective, and how you can use it to catch high probability trades. So stick around to the end of the video because then I'll show you real chart examples so that you can see how this strategy performs in action. The very first thing I'll be covering in today's video is the element of time. Remember, it is very important. It is first time, then it is price. If you are a Forex trader, I recommend looking for the unicorn setup between London Kiel Zone between 8 a.m. and 5 a.m. Eastern Standard Time, New York time, UTC -5. If you are a futures-based trader, I recommend looking for the ICT unicorn setup in New York session from 8 a.m. to 12 p.m. Eastern Standard Time. When it comes to price, please always remember you want to wait for the time to align and then you start looking for your setups. So write down these two time zones, time windows, and those are the two times where I want you to start looking for the unicorn entry model. Now that you know when to start looking for ICT's unicorn, how do we actually spot the unicorn setup? Now, the first thing we are looking at is a breaker block. If you do not know what a breaker block is, I'm going to explain it. We are looking for a signature and price action that looks like this, or it looks like this. In a bearish scenario, we want to see price action make a high, down to a lower high, up to a higher high that takes out liquidity. In a bullish scenario, we want to see price action make a low, up to a lower high, down to a lower low that takes out liquidity. Those are the scenarios, the setups in price action that I want you to wait for. Now that that's happened, where is our actual breaker block? The actual breaker block is going to be the leg of price between the previous higher high and the higher low. That is going to be your breaker block. In this example, it's going to be the lower low to the lower high. That is going to be your breaker block. So we measure it from the body open to the body close. And the same thing here. We measure the breaker block from the body open to the body close. That is going to be your breaker. This is going to be your bearish breaker. This is going to be your bullish breaker. So how does that actually look like? Well, we can see here in a bullish environment, we can see that price action trades down, makes a low, makes a lower high, takes out the low, and we sweep liquidity, and we have closed above this zone. So where is our breaker block? Our breaker block is going to be from the body open to the body close. We have two consecutive up-close candles. This becomes our bullish breaker. We can then see price action retraces to that breaker and then rejects, and it supports higher prices. In a bearish environment, we can see that price action trades up, forms a high, trades down, forms a higher low, goes up, takes out liquidity, forms a higher high. Then we close below these up close candles and we close below this down close candle. So where is our breaker block? Remember, the price signature we have is a high, higher low, higher high, lower low. So our breaker is going to be this area of price. So in this example, our breaker is going to be from this body to this body close. That is going to be our breaker block. And we can see price action trades into the breaker block and it supports lower prices. Okay, so now that you know time has to be in place and we need to wait for a breaker block to form, what is the next thing that we want to see? We want to see the formation of a fair value gap. You have probably heard of a fair value gap. If you do not know what it is, I'm going to explain it. A fair value gap is a 3-candle pattern where price action leaves an imbalance. So candle number 1 we have, candle number 2 we have, and candle number 3. The highest point of candle number 1, the wick high, does not touch the lowest point of candle number 3, the wick low. This is our fair value gap. That is an imbalance in price action. A bullish fair value gap is known as a BC, and a bearish fair value gap is known as a CB. Here we have a bearish fair value gap where we have candle 1, candle 2, and candle 3. We can see the lowest point of candle 1 does not touch the highest point of candle number 2. That is our bearish fair value gap. Now we want to see price action rebalance this imbalance and then continue down lower. That is the significance of a fair value gap. So now that you know what a breaker block is, you know what a fair value gap is, and you know time, let's join everything together so that I can show you how does the ICT unicorn entry model look like. So how do we blend all those concepts together? First of all, remember, I want you to wait for that trading session. Let's say we are in London kill zone and we have this setup. We can see that we have 3 consecutive down close candles, up 2 candles, down 3 candles. This move down takes out a low, so we have a low up to a high, down to a lower low. That sweeps liquidity. Now, where would our breaker block be? Fix your attention to the gray box. The gray box is from the body to the body. That is our breaker block. And in this displacement leg, and that is the key, we want to see displacement. We have a fair value gap. Now, that fair value gap lines up with our big breaker block. That is the unicorn setup. We want to wait for a fair value gap that overlaps with a breaker block. Now you have 2 PD arrays that lines together. So that is where you can take your entry. When price action retests the fair value gap and you put your stop loss below the breaker block. That is the unicorn model. That is how this very strong signature in price action delivers very accurate trades. If you are tired of feeling stuck in your trading, I do recommend joining the mentorship program. It is a mentorship program that is so much more than a course. I trade live with the students 3 times a week and they see my exact entries, exits, stop loss, take profits, everything. They see everything. I do not hide anything and they trade live with me. You can see that we have a very beautiful trade taken today in the live session. Obviously, guys, this is a complete mentorship program where I share my analysis, I share everything that I do, and we honestly have so much success in this group. You can just go ahead and pause the video and read through the countless of testimonials that this program has produced. Now, this is much more than a course. This isn't just a video that you have and that's it. I trade live with you, I hold your hand, and I take you from being an unprofitable trader to working through every single step that you need in order to become a professional full-time trader. That is my job as a mentor, is to get you to where you want to go. If you do decide to join, I do have a 10% off lifetime access. Use the code LIFETIME10, all caps, to enjoy your 10% discount. So looking at NQ for our first example, we are on the 15-minute time frame, and you can see that we are in New York session. So we have the swing high here. We do have a swing low here. So now we are just waiting for price action to take out liquidity. Remember, if we don't get a liquidity raid, it's best not to trade. If there's no raid, there is no trade. We sweep out liquidity, so we drop to the 1-minute time frame. Remember your correct time frame alignment. Now, we have taken out this liquidity to the left, and we can see that we have a low, high, low, higher, high. So we do have a low here that price pushes away from to make a high. So we go from a low to a high, down to a low, up to a higher high. Now, where would your breaker block be? The breaker block will be this single down close candle from this high to a higher low. Measure it from the body to the body. That is your breaker block. And now what do we need? We need a closure below that breaker to confirm a reversal. So we are waiting for price action to close below it. So now we have closed below it. Do we have a unicorn model yet? We don't, because we need a fair value gap to form. We don't have that fair value gap, and we wait for one more candle to print. Now, do we have that fair value gap? Yes, we do. Here we have that fair value gap. So we have a valid unicorn setup forming here. Where do we take the trade? A breaker block is a stronger PD array than a fair value gap. So in this example, I would take the entry at the retest of the breaker and place a stop loss above the fair value gap. That is personal preference, and target 2R for my first target. And then we can go ahead and we can target these lows over here for a second target. Now you can do that, or you can take an entry at the retest of the fair value gap. That is up to you as the trader to decide. Now we play this forward. What do we get? Price action taps the fair value gap and we start trading lower. Let's see what happens. Then we go up, we retest the breaker block. Now what happens when we take out the breaker block? Prices run lower. We take out that low for a 2.3. If you would have taken your entry at the fair value gap, if you took the entry at the breaker, you would have had a 3.42R on this trade. So we can see how a breaker and a fair value gap aligns, and that supports lower prices. That is why this is such a powerful entry sequence in price action that it's not worth it to overlook this. In this example, we are on gold on the 1 hour time frame, and Asia's kill zone has just printed. So now we have a liquidity buildup of liquidity at the bottom, and we have buy side liquidity as Asia liquidity high. So we are waiting for price action to take out either side because we need liquidity. We need that fuel in the market. Now we have taken out Asia lows and we have taken out a buildup of sell side liquidity. We have also completely filled this fair value gap. So now from the 1 hour we drop down to the 5-minute time frame, and now we are just waiting for that unicorn model to form. So here we have that liquidity sweep, this red line. Now we are just waiting for that unicorn to form. Let's wait for prices to do its thing. We trade lower. Now let's see what happens. Do we close above? We do close above. So here we have a low up to a high down to a lower low. So where is our breaker block? We have a low with 3 consecutive candles. We have taken out this high with 2 bullish candles. Those 2 bullish candles becomes my breaker block. This is my breaker block. I'm just going to remove. That is my breaker block. Do I have an overlapping fair value gap with that breaker block? Yes, I do. So if you look at the breaker block, we can see we do have this fair value gap that sits nice in the middle of that breaker block. So here I do have that fair value gap, and that is where this becomes a very, very strong point of interest for price action. So again, it is up to you. You can take the retest of the fair value gap, or you can take the retest of the breaker. Let's take the retest of the fair value gap. We place our stop loss a couple points below the low of the candle that made that fair value gap, and we can target 2R as our initial target, and then we can hold runners till we hit Asia high. Let's see how this trade plays out. We trade into that fair value gap. We also hit the breaker and we hit this propulsion block. Let's see how this plays out. And there you go. Price action comes back into that breaker block. But look at this. The bodies respect the consequent encroachment of that breaker. That is an indication that that is a strong PD array and is likely to hold. So I hope you guys can see how do we actually spot ICT's unicorn and how do we trade it. Here we have our final example on EURUSD, and congratulations for sticking to the end of the video because I'm going to share with you a lot of gems with this final example. First of all, I showed an example with NQ, I showed an example with gold, and now I'm showing an example with currencies, with euro dollar, to show you that these concepts works over the board of assets. It's not limited to one asset, it also works with crypto. It is up to you to go and test this and see it for yourself. So, looking at EURUSD on the 1 hour time frame, what can we see? We see Asia kill zone has just printed. We have taken out this sell side liquidity. Now, let's wait for the kill zone to finish. Kill zone printed. We have taken out Asia lows and we have completely filled this fair value gap. So, we have also inverted that fair value gap. Now, we have SMT with GBP USD from that low to this low. If I pull up GBP USD, we can see GBP USD took out this low, while Euro USD failed to take out the low. So we have bullish SMT with GBP USD. So now we have a couple of confluences. We took out liquidity and we have SMT. Now we drop to the 5-minute time frame. Remember, from the 1 hour we go to the 5 minute, and we are waiting for a shift in structure. We are waiting for a bullish change in the state of delivery. Where would that be? We do have all of these down close candles. The moment we close above this, that becomes my change in the state of delivery. Let's wait for that close to happen. There we go. We close above it. So we went from a bearish program up to a bullish program. Now I want you to mark out your breaker block. If we look here, we see we have one bullish candle. This candle becomes our breaker block. Now we have our breaker block. Do we have a fair value gap that overlaps with the breaker block? We do. If you look here, there is a fair value gap that we can use as an entry reason. So we can take our entry at the retest of that fair value gap because we overlap with a breaker, place our stop loss a couple pips below the low of the candle that made the fair value gap, and we can target 2R for the initial, and we can take trailing targets all the way to this completion of the market maker buy model. So let's see how this trade plays out. Let's see if we get an entry. We get that entry into the fair value gap. Do we run higher? Yes, we do. Immediately we hit 2R. So this is where you move your stop loss to break even, and we target the high of this market maker buy model. Let's see how this trade plays out. And there you go. There we have hit this high. This is actually a trade that I've taken with the members of the private mentorship group, and I'll post a screenshot just to prove it. Guys, I hope you enjoyed today's video. I hope you learned immense value. If you did, let me know in the comments. Leave a like, leave a comment below. Let me know what you need, what videos you need on the channel, and I will gladly help you.